Hi you guys, what's up? Trying to give you a quick update about what's happening, the surrounding noise regarding Charles Schwab. A lot of the depositors are fleeing Charles Schwab. That's because of, they're not earning really high interest yield on their deposits, or they're wanting to go to money market accounts, CD accounts, just so they can earn higher interest yield on their deposits. And what's happening is that, Charles Schwab during the pandemic invested a lot of depositors' money uh, and bonds, treasury bonds, mortgage-backed securities when, at a low interest environment, when, interests were really low back then. So they weren't earning as much on their, investments. And now, depositors are wanting higher interest yield, and so that's a bit problematic for Charles Schwab. And so also, a lot of their assets, just by looking at it on their balance sheet, have lost so much value. A lot of the bonds sitting are just losing losing lots of value. Their prices are diminishing, and so that's creating lots of unrealized losses, and a lot of these unrealized losses are not disclosed on Charles Schwab balance sheet. And so a lot of depositors, even investors, are just panicking and worried that they might have they won't have as much as capital available to liquidate, or give back depositors money, or even increase the interest yield on depositors accounts. And so that's definitely creating a lot of noise and panic about Charles Schwab. And this rumor, speculation, that they have much more liabilities than their current assets. And since their assets, like I was saying, lost a lot of value, and they haven't put them on the market right now. They haven't sold their bonds. Some of the bonds are just sitting, and they haven't sold it on the market. And if they choose to sell it, it's not gonna be as much as they used to be. When their prices were much higher a few years ago, rather than now. Just lost so much value just because of the high interest environment, and directly affected the bond prices, which plummeted bonds. And so a lot of their assets, and some of them are bonds, are their values are diminishing, and so that's creating a lot of loss. And so if they're having to liquidate their assets just so they can give back depositors money, or pay up liabilities, debt, and stuff like that, it's not gonna be enough, and they'll have to raise capital and at a fast, rapid pace, and it's not gonna be sufficient time to say they have a bank run and like a huge panic like Silicon Valley Bank. It's not gonna be sufficient to cover all the depositors. So a lot of the panic going on right now is regarding depositors, and they're wanting to wanting to earn a higher interest yield on the deposits, but Charles Schwab cannot do that because they're not earning really high on their bond invested, and so that's definitely creating panic. And so just want to give you a quick update regarding Charles Schwab and what's happening. It's definitely the unrealized losses that they have now, which is not gonna be enough capital to be paying back a lot of their liabilities. And that's not just depositors' money. That's including debt from other institutions, loan securities, and other types of liabilities that they have. And so that's not gonna be enough to cover all of that. And so I just want to give you a quick update, let you know what's happening. Please subscribe to my channel, hit the subscribe button down below. Lots of good videos to watch. Thank you for watching all my video. Thank you.